Hello and welcome to this Thursday's morning market briefing. We've got lots to talk about, but firstly, Jeremy Hunt cuts national insurance, but taxes head to post-war high, as well as that Israel approves hostage deal with Hamas in groundbreaking negotiations, including Qatar, the US, Israel, and Hamas. But we've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around to see that. Before we get straight into it, make sure to subscribe. But the first article to talk about is Jeremy Hunt and the annual budget. Now, Jeremy Hunt has cut business and personal taxes by £20 billion in the autumn statement. Now, this is in an act to boost growth. However, overall taxes are still rising to a post-war high. Now, I think we've made two market briefings now where we have covered the prospect of this autumn kind of budget. The most significant kind of financial statement and summary and outlook for the year from the government in relation to the budget, of course. And we were kind of looking ahead to this autumn statement in relation to the potential of tax cuts. We understand that inflation has been a large issue for economies around the world, but at the UK especially so. And so the UK economy has been in a tough position. We're coming out of COVID, the high levels of borrowing which took place during that period to sustain the kind of economic conditions that were held at the kind of decent levels that they were, came at a price, and that was borrowing, and therefore, the UK economy has had to deal with that ever since. And with that, we've also been experiencing those high levels of inflation as a result of, the lockdown worldwide, along with, the geopolitical conflicts at the moment, which are driving up supply prices as well, and as a result, creating that high level of inflation that we have seen, especially within the UK economy, where inflation peaks over, the level of 10%, which is very, very significant, 5 times the target of the Bank of England. But now we are seeing that kind of inflation level come down. We are now hearing from the government as they do go into the election year in 2024, we are hearing more and more of this kind of tax cutting rhetoric, which we traditionally do hear from the Conservatives, but most recently haven't heard that, especially from Rishi Sunak's government. But the OBR is saying that the plan would provide only a modest boost to growth. So this is more of a pessimistic view, I guess, on Hunt's statement in relation to the budget and future economic plans. Hunt said he would cut the rate of national insurance by 2% to 10%. Would cut national insurance by 2% to 10% once 2024 does begin. So very start of 2024, people will begin to see that on their statements, and a lot of people as a result have been making these sorts of accusations that this kind of budget was highly political, in the way that, of course, it's a government, it represents a singular party, but the point is this kind of budget was based around trying to draw that dividing line within policy in relation to the Labour and Tory party. After all, we do know that the Labour Party has been leading in some parts by 20 points in comparison to the Conservatives, and therefore the Tories are trying to hit back a bit by drawing that dividing line, finding what sticks, and really proving the party to be the party of low tax, because at the moment many people, I guess, are falling out of bed with the Conservatives over the issue of taxation. Many people generally used to see the Conservative Party as the party of austerity, low taxes, that low government spending, low tax kind of life, but we haven't been seeing that following COVID. So this is why Hunt's trying to sort of still prove that the Conservative Party is that sort of party, with this costing £9 billion for the government, with that money being saved, of course, by the individual, the person working, and therefore costing the government at the same time, because this is the money that would be coming in, of course. Now, Hunt also implemented a big measure in the context of business taxes, by making the full expensing capital allowance regime permanent at a cost of £11 billion, with this being the largest business tax cut seen recently, of course. Now, this is a very big move, of course, and it's, of course, in an effort to make the UK more competitive on the business level, and we've been hearing this rhetoric echoed by members across both sides of Parliament, but it does seem that Jeremy Hunt's trying to make that move by lowering taxes inadvertently, as a result of making it easier for businesses to write off expenses and therefore be taxed less. With the timing of national insurance cuts causing speculation over a potential spring election if polls do start to swing up. So because we will be seeing that national insurance tax cut kind of come into effect during the start of 2024, people are beginning to speculate, because next year is the election year, whether the Conservatives will try and place the the kind of sorry, my wording's really bad. The kind of general speculation now is, might the Tory party put the kind of election time, within that spring period, so people have just experienced kind of that national insurance tax cut, and then they're going into the polling stations with a more positive view on the current government. So that's kind of the speculated move by the Conservative Party. Now, the tax cuts, however, are dwarfed by the government freezing tax thresholds, as this is coming in line with the higher levels of inflation that we have seen, with those higher levels of inflation, seeing other people's wages be risen as a result, and the fact that the government hasn't raised those tax brackets in line with inflation means people are then inadvertently, whilst not actually gaining any boosts in their wages in real terms, they start to see that tax being taken from them in relation to being moved into a higher tax bracket, with an estimated 4 million more people having to pay income tax for the first time and 3 million having a higher rate, with this causing accusations of fiscal drag by the opposition. Now, the Chancellor left government departmental spending near unchanged levels, reducing borrowing by 27 billion compared with prior forecasts. So, creating that level of fiscal headroom, of course. Now, he also set out 110 supply side measures intended to boost business and capital flows, with the full expensing of capital investment plan, potentially increasing business investment by about £20 billion a year within a decade, and closing the productivity gap with other economies. And projections for UK growth sit at 0.6% this year, which is compared to the previous forecasts of a contraction, and 0.7% next year. And this obviously is in contrast to the prior forecast. But that's all to talk about on this topic. Keep your eyes on any more developments in relation to this, maybe what the opposition's saying, how the UK political scene is shaping up. Keep your eye on that. But next to talk about is Israel, as they do approve hostage deal with Hamas. Now, Israel and Hamas have agreed for the deal and release of at least 50 civilian hostages from Gaza. Now, this comes under a condition of Palestinian prisoners being returned and a 4-day pause in, kind of hostilities. Now, this all obviously is following those October the 7th massacres, where, Hamas militants did storm over the border, massacre, over 1,000 civilians, take, hundreds hostage, and now it does seem that, Israel is making ground in being able to secure those hostages and bring them home. We know, a few have already been secured through, prior deals. far smaller deals, however, as well as, one Israeli soldier that was taken hostage also being, recaptured by Israel and brought home. But yeah, this is really a topic that we've been talking a lot about, been speculating over this hostage deal being approved, and now it does seem that it has been approved, which will come to the benefit of many of those Israeli protests, which were calling for, those children to be brought home after them being taken hostage by those Palestinian militants on October the 7th, with up to 50 more potentially being released in a second phase, with every day of the ceasefire being added, giving Israel the ability to receive 10 more hostages in return. But we do have to remember, a price still for Israel is the fact that they will be returning those prisoners, which obviously they don't want to return in relation to prior attacks and that sort of thing. Now, this pause will be the most prolonged cessation, I can't pronounce it, sorry, in the conflict following October the 7th, with 200 trucks of humanitarian aid and fuel flowing into Gaza during the ceasefire. Now, Israel has really held off on, Hamas and, the Palestinians within the Gaza territory being able to receive, external kind of supplies. So, Israel did shut off the water, electricity, communications, and that sort of, and fuel, especially into Gaza. This caused obviously large humanitarian issues as a result, with the population as a result being subjected to a lack of water, and that lack of electricity as a result of shutting off that kind of power supply into Gaza, along with shutting off the fuel supply into Gaza, restricting Palestinian families to using things which didn't require fuel, and also forcing hospitals to run at partial kind of potential and capacity, and also as a result causing some great issues for those hospitals. Now 150 Palestinian women and children will be released from Israeli prisons in the exchanges, with the Israeli public now having 24 hours to appeal against the agreement. One group already has, and this is in relation to them appealing against those Palestinian prisoners that have been taken, preventing them from being returned, as some of them have caused, or at least what's kind of said on the website when I checked, these Palestinian prisoners that are being returned, according to them, have committed large crimes as well, which are obviously inexcusable, and can't as a result be exchanged, despite the value of the hostages. So it's kind of this issue within the public that now they have to kind of decide on, and decide whether to appeal. But generally, according to the Financial Times, the Supreme Court generally doesn't accept the appeal. So most likely, this hostage deal will take place now. It's just whether it will go through in proper effect, with the release of hostages being staggered over 4 days on both sides, to test the waters, of course, make sure that both parties are working fairly on returning the hostages and the prisoners to either side, and making sure there's no kind of slip-ups involved in that. With the temporary truce beginning at 10 a.m. Local time today, with Hezbollah also apparently abiding if Israel does, with 3 of the 10 unaccounted for Americans also being expected to be released in the first phase of the deal, with Hamas still holding almost 200 other hostages even if the deal fully goes through. For the deal to occur, complex negotiations including the US, Qatar and Israel took place. Of course, with if the swap does succeed, negotiators do hope that this will be the first of several to take place. So keep your eyes on this, as tensions are still very high. But next to talk about, of course, is the chart. So firstly, to talk about is the US 30. Now, the US 30 has been rallying for quite some time now, since the start of November, and this kind of continuing rally pattern is continuing up until now, and we're ever nearing and sort of already tapped this area of liquidity, as I have highlighted over here. And this was kind of the first area that we did highlight when looking back on the US 30 following breaking above this high, where the US 30 could come into contact with some resistance, and that's why we had it marked out. And now it does seem to be coming into contact with it. But as we can see here, the US 30 has been trending to the upside, and is currently in a moment of bullish momentum. So keep your eyes on this as it does come into contact with that area of resistance. Next to talk about though is the dollar, with the dollar reaching now this area of Fibonacci resistance and liquidity, after following that retracement that we began to see on Tuesday of this week. And now the question is, now that it's tapped this area of liquidity and this Fibonacci level, whether price will then continue to roll over to the downside and continue on a movement lower. So that's the real question. Obviously, we had this bullish divergence which caused price to retrace, but unless price breaks above this area of structure, this prior higher high or higher low, lower high, then at that point, we can't say that price is going to start continuing higher, and we can simply say that price is likely to continue lower. So the question that we want to see is, will price make a significant move away from this area, and if so, how low can it continue going to, with obviously that minus 27.2% Fibonacci area being of significance to note over there. But next talk about is Euro USD, after it has seen that reversal in line with the dollar retracing. And the key thing that we want to be looking out for on Euro USD, because it hasn't come into contact with any of these Fibonacci areas, is if price does break below this structure, obviously, or whether it taps one of these Fibonacci areas. It does seem that the 50% is the most highly probable area to make a significant move from, as it would be able to stop out positions that have stop losses below this area of market structure, and would enable price to come down to a significant area of liquidity, tapping out those individuals, but bouncing off that 50% Fibonacci mark, and upward trend line. But next to talk about is pound yen, which like many pairs at the moment is coming into contact with the 61.80, as we are potentially looking at a reversal on the pound. Now, pound had been kind of taking a significant move to the upside since the start of November, after it broke out this this range that we were sitting in, and price took a significant move to the upside. But after we did kind of present this kind of more reversal looking price action, we have started to see that move to the downside, and we could be arguably experiencing a retracement at the moment, where price is coming up and testing the Fibonacci levels before moving lower still, as price did tap this strong area of liquidity before making that retracement to the upside. So keep your eyes on pound yen. Next talk about though is USD JPY, which obviously has been very, very volatile most recently, but has been jumping between these areas of liquidity. So keep your eyes on whether price can make its way back up to 150 on the chart. So that's the key level to be looking out for, as it's in line with this area of liquidity. Next talk about though is gold, which took a significant move to the upside, obviously after hitting and tapping that 38.20 Fibonacci level and area of liquidity through mid-November, and has been moving on the upside since. And obviously this is in line with US inflation data kind of coming out and that sort of thing, which honestly provided a bit of kind of opposite signals to what we would expect for gold, but gold has been taking a move to the upside with a clear trend, those retracements before moving higher, retracement before moving higher. But we did highlight that price was starting to come into contact with these areas of known resistance, and the question was, how would price then react to those levels? Obviously price has now come into contact with that level and is now looking actually at a possible reversal. The question, of course, once again though, is does it break previous market structure? Does it break below these previous higher lows? As this would signify then a reversal on the charts, as we are seeing this kind of bearish divergence, which we did highlight as another possible confluence to price stagnating here. So keep your eyes on gold. Next to talk about, and lastly on the charts, is oil, which is kind of in this really interesting area of price action. And this is can be seen over here after price obviously breached that $80 a barrel level before peaking once again back up on a retracement and tapping this 78.60 Fibonacci area most recently, which was in line with a strong area of liquidity, but price failed to continue lower. It does seem almost forming another kind of upward trend at the same time as also forming a short-term downtrend as well, and as a result we're kind of forming this flag at the moment. So this is the key area to keep your eyes on, and how price interacts within this flag and where it goes from there. But that's all to talk about in relation to the charts. Lastly to talk about, of course, is the economic calendar. Quite a bit of data coming out today, so we'll get through this quick. But firstly, we have French business confidence coming out, along with manufacturing and services data, so listen out for that. So as that, we have lots of manufacturing and services data actually today, so listen out for all of this, because we do have German and Eurozone manufacturing and services data being released, as well as that we will have UK manufacturing and services data also being released, as well as that we do have the ECB's monetary policy meeting accounts data coming out, so here make sure you're around for that. Along with that, we will have Aussie retail sales data, as well as Japanese inflation figures coming out today. But that's all to talk about for the economic calendar. We've covered lots on the articles, we've covered lots on the charts, and now we've covered a lot of data that's coming out today. But that's all from us at Wildwood Capital. I hope you have a great trading day. But yeah, see you later. Bye.